Hello and welcome back to this edition of Daily Actives brought to you by Blue Leg Macro. I'm Dustin. We're going to review a few different tickers today. One of the things that I like to do to get the party started when I'm thinking about the overall markets, I like to actually just review from the sector perspective. So we're going to take a quick look first at the sectors. I do want to take a quick look just at XLB because I think that I like to start at the beginning of the alphabet. It makes it so much easier. Let's go ahead and look at this. It'll just populate. This data that we're seeing right now is coming from Google Finance. We can see today that XLB was down 1.94%. That's not great. I do not like to see that at all. Now, what I like to do here is I'll generally just use a card to go ahead and chart the way that the market looked for the overall day. It does take a little bit, but I am doing a 3.5 card for those of you who are paying attention at home. And what I'll do is I'll put like 5 lines or so. I'll write down essentially what's going to be is the bottom of the range, top of the range. We're going to look here. We're going to say that the price was at 76.88. That means that it was above the middle, but it was below the top. That is not terrible for XLB. Now we're going to take a look at XLC. The nice thing about this is that the data comes really fast because I got a brand new iMac and the MacBook Pro. The M2 chips are incredibly fast. I'm very excited about the M3 chip on the MacBook, whatever those pros are. I have a mini. Let's look at XLC here. XLC, I've been expecting to fall from the top of its range, and it did to a certain extent. Now, the difference is that the top of the range has just moved up. So now we are slightly almost at the top of the range, or at the top of the mid-top, which shows that, again, we've come down, not necessarily, but the top of the range has actually slid up, which is very fascinating. Now, that means it's gotten incredibly bullish. And we'll take a look at XLE, which I imagine will have a different look than XLC because it is not actually bullish right now. If we look at XLE, yeah, it's been quite ugly, down 2.2% today. Yuck. If we look, we're near the mid-bottom here. It is not great for XLE. I do not expect it to continue this move because I kind of expect oil to go back up, but you never know exactly what's going to happen with these tickers. You know, that's the whole point. That's why it's called Brownian motion. That's why it's called chance and risk and reward. Looks at XLF. It's kind of flat on the day, which is really interesting. It's at kind of the top of the range. It's above the mid top. So it's closer there. XLF. Obviously, that would happen. I think the most important point when you think about this is that these kinds of moves are going to be really reflective, specifically because you're going to be looking at the 10-year. And actually, what I should do is I should actually start it with that one, but we'll get to it at the end here. Look at XLI. This is going to be industrials. This is just right above the mid-level. So we're looking at that. XLI. Close to where XLB and XLC are, which is always good and interesting to pay attention to. We'll look at tech here, XLK. XLK, I do find it's a good way to be able to look at tech, but it is a little overweighted towards Microsoft, which you can tell is having a great time here. Ooh, we're above the mid-top. We're above 170. That is actually really good. XLK is up right underneath XLF, the exact same place. Again, it's going to be based mostly on the idea that you're seeing interest rates come down because there's recession fears. Recession fears are always going to give people an opportunity to want to buy growth, especially real growth. Looking at XLP, I do like staples. I've been waiting for them to come down a little bit. It doesn't look like they're going to come down even remotely. They're at 69.03, which is above the mid-top, so they are right under. Isn't it interesting when you see XLF, XLP, XLK all stacked with each other? Like, if you really think about the way that the market should set up, that should really never happen. I mean, the growth in staples and financials. I mean, I get why tech and financials would be up, and I get why staples and financials might be up together, but it just seems like that doesn't. I mean, you would expect, I guess, discretionary to be up there at that point. But let's look and see what we have at the metals. I was like to pay attention to the metals. We're just above. Metals are not behaving very well. They are just above the middle line. So I put them behind. They're in the same zone as XLB, XLC, and XLI, but it's definitely behind there. I don't really like the look that you see in metals right now, at least in this ETF. If you're looking at gold and silver, it's completely different, but we'll get to that. We're taking a look at XLU. XLU, this is one that I'm actually short because I was expecting inflation to continue to flare up. When we look at XLU, though, we're right above the mid-top, so we are. Again, it's right where staples are, right where tech is, right where financials are. You just don't, it's not exactly what you're expecting. Let's take a look at real estate here. Real estate should be nice because of interest rates. You can see that gigantic move that we've seen. Today it was down a little bit. It is still at the mid-top. It's still just below the mid-top, which is really interesting when you think about it. I mean, the idea that it's right below XLC and XLI. I mean, come on. Why? Why would XLRE be in that exact same place? But when we take a look, now it's the next one. We're going to take a look at XLY. This is going to be consumer discretionary. Consumer discretionary. always a fascinating one because it has such moves. I mean, this move that we've seen just very recently, you're down so much over 1 month, but you were up over 15 days just slightly. Super interesting, super fascinating. Look at 162. We are way up there. We're actually the highest so far. That is actually the highest in the overall market, which is crazy. But again, you've seen a gigantic move one way and the other. Let's look at XLV. XLB, healthcare. Healthcare has actually been a weird one because it's performed really well recently. You can see it hasn't actually performed well at all, but certain parts of it. So, like if we look at insurance, insurance looks incredibly good. That's the one thing that you don't notice about XLV, the way it's composed. It's not clearly pulling a lot of the insurance. Let's see. We're at the very top, essentially, the range though. XLV. See, it's funny because it's starting to rise off of this level, so it looks good because it's up here. It's above the mid top, but it's below the top of the range. But it's down across every single metric. Now we're going to take a look at the dollar. I think the dollar is probably the most important thing to take a look at on a regular basis. And the dollar here is actually most interesting, even below its midline. The dollar is in the same zone as oil, which is interesting, but it is right below everything else. So it is pretty much alone. Let's take a quick look at the way the 10-year is looking. 10-year should be fascinating because the 10-year's come down quite a bit, but it's still up a lot. So if we look at the zone, look at where it is, it's actually way below the bottom of this range. So it's further down. It's further down than the dollar. It's the furthest thing down completely. Let's take a look at the VIX. Because I bet you the VIX and the 10-year are probably in a very similar spot, actually. The VIX is at 1481, yeah, and the bottom of the range is at 15. So the VIX and the 10-year are at the exact same spot right now, which I think is really interesting. I think that's really interesting. We're just going to take a quick little look just at the major ETFs, the SPY, the Qs, and then the IWM. And then what we'll do is we'll look at oil, we'll look at the Magnificent Seven, or whatever those really big ones are that everybody's paying attention to these days. We see here the SPY is off the chart. It is above the range. Like it is above the range. It is breaking out. There are positive things happening in the SPY, especially over the past month or so, which you'd expect when you think that the VIX is at the bottom of the range with the 10-year. Obviously, a very high correlation. If we see here with the Qs are off the top, off the chart as well. That is a good thing to see if you are a bull, or at least have been a bull since the very end of October. Let's go ahead and look at IWM. I just want to see what's happening with the Russell. The Russell, really, the breadth is what we want to see, but it's just ugly. Are we down today? That's unfortunate. We're at 170, 170. We're still up there. We're still up there, but it does not look like IWM is in a great spot. What I want to look at now is actually I want to look at RBX. So RBX actually is the IWM volatility, or the small cap volatility, and that is falling. Was it flat today? No. So this is interesting because where the volatility is for RBX is still in the middle of the range. It's still above the mid top, and it's just below the action line, which is interesting because the VIX is in a very different position. A very, very different position. So let's go ahead and look. Now we're just going to look very quickly at oil, because I imagine that this is down quite a bit as well. Because we've seen if where XLE is below the midpoint, oil is even further down. Oil is all the way down with the VIX and with the 10-year, which you wouldn't expect, but you do see as makes sense. Let's take a look at Apple, because obviously this is a major bellwether of the entire market. I want to see what is going on there. Apple looks like it was up. Apple had a very nice day today. Apple is at the very top of its range. It is higher than even the top of its range at the moment, which I'm quite impressed with, because the way that it responded to its earnings did not bode well specifically for what Apple was needed for the narrative, but it looks like it's really returning. Now, Amazon, on the other hand, Amazon is showing people how things are done in the market. Amazon is just below the top of its range, so it's just behind Apple. It still has a little bit more to gain, I think, just because why not? Like, if it's really bullish, people really believe in it. If the company is really doing well and there's real true growth, people don't care. I think that's the ultimate thing that people need to understand, is that when the market is moving and the market is going up, and if people are looking for growth at all costs, especially because you're in a recession, that market move is actually the beginning of the shift. It's a sector shift in the ETFs, which are going to drive the next leg higher. If you really think that it's going to be something like that, that's how it works. You have a rotation, which is messy, but once you see moves like this, like even CRM is up. It tells you a lot about what is going on in the overall market when something like CRM, which is a name stock, like people know Salesforce, but it's not the name stock. It's not Amazon, it's not Apple, it's not Nvidia. These stocks have much more pull. When a CRM is up, that shows you that you're getting a little bit of breath, at least in the the sector that exists here. And I mean, the sector is going to be like what, mega cap tech. I mean, it's not a huge sector, but it's enough in terms of market cap to move enough ETFs, move enough mutual funds, move enough flows for people to start feeling like, maybe things are better than I thought. Now, Meta, on the other hand, Meta is an interesting place because you're at 318. You had a nice day, but you still are not showing, you're not breaking out the way that you should based on what you're seeing here. I'm not really liking this look at Meta, to be honest. Meta is just below its mid top. So it's at the same level as XLC, XLI. Well, you'd expect this to be exactly where XLC is, since XLC has a ton of Meta in Google. I think it's 40% of XLC is Meta in Google. So if you look around Google, Google's going to be pretty much the same place, probably right around here, exactly. So it's in between the action line and the mid top. So you're seeing these two kind of, they're in a place where if they wanted to run, they definitely could, and there's room up there, but they're not showing the type of response that you want to see. And there's going to be a major difference because like Microsoft has a very different chart than both Meta and Google. And it's because Microsoft is a stock that is going to be a leader because it has growth. It has fundamental growth, and people believe in it because of that. When people are scared, they want to chase real growth. When people aren't scared and they think that the world is just going to be puppies, unicorns, and like rainbows, they just invest in anything a la Carvana, a la Clover, a la a bunch of these other names that have gone away in the past few years. Look at Tesla. Tesla is showing us some resilience. Tesla is above its action line. It's below the mid top, so it's in the exact same place as Meta and Google. There's a place for it to move, and Tesla is one of those stocks that can really, really move when it gets moving. So I'm very conscious to watch that, and I'm very curious to see what ends up happening. Now we're going to look at our final one here, which is going to be based on UNH. Again, this is what I was talking about earlier. If you were listening around the healthcare ETFs. This one specifically is an insurance. And when you look at it, it is dramatically different to every other stock that you see in the market. This thing is up on the 1 year. It looks fantastic. This is the type of stock you'd actually want to buy right now. This is actually probably what I'm going to buy. I'm probably going to sell a bunch of my oil names if things go crazy. I'm going to sell a bunch of my oil names. I'm going to buy UNH because I see that this is really a great opportunity. And it's up there with Microsoft. It's up with NVIDIA, CRM, Apple, Amazon, XLY, SPY, QQQ, IWM. This is really a nice list of stocks at the very top of the range. I don't know what I think about what's going to happen tomorrow, but I do believe in Microsoft. I do believe in UNH. Everything else, good luck and good riddance. I would truly wish that oil would continue to rise. It doesn't think it's going to happen. I think that you're still going to get a rise in rates in terms of them going back up from 450 or so, because I know when we looked at it, where exactly is the 10-year right now? I think it's around 458 or so, but it's at the very bottom of its range. It's 457. And it can definitely go back up. At the top of the range I have is 509. So that is about 50. It's about 40 basis points, 42 basis points of movement that you could completely see in the market in the 10-year really quickly. And I don't think it's a stretch of the imagination to say that, like, yes, we've definitely pulled the top of our range down to the, like, very aggressively, very quickly, but it doesn't mean that things wouldn't change here in the 10-year and go right back up. Like if you look at the top of the 10-year right now, again, it's at 509. The bottom here is at 447. We've pretty much hit it. I think the only thing that you'd be concerned about is that we're digesting the real gains. The real gains are the moves that we've had since the bottom here in April of 2023. This gain that we've had is pretty obnoxious, I will admit. I have not thought that I could see anything like this in my lifetime, but c'est la vie, here we are. So tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. If you're already here, we send you 25 stocks to your inbox every single Sunday. Stocks between $5 and $20 that are breaking out. Stocks bringing up to 1-year highs. Stocks bringing up to all-time highs. It's a great list to get your trading week started. I'll talk to you soon.